Bene, buongiorno a tutti, good morning to everyone, thank you for being here, grazie a tutti per essere qui, per questo incontro che abbiamo organizzato con il professor Odlyzko. Non voglio spendere parole sul professor Odlyzko perché, tanto perché è inutile, I don't want to spend words about your CV, everybody can or have read his CV online, so we know him very well, and we thank you for being here in Rome, and he came just for this talk, so it's something that we are very grateful to him for this kind effort. I have a message from Onorevole Giacomelli, and I will read it. It's in Italian, so my apologies, Andrew, I will translate it later to you. Caro Stefano, onorevoli colleghi dell'Intergruppo per l'innovazione, vi ringrazio dell'invito alla conferenza del professor Andrew Odlyzko, ma impegni istituzionali mi impediscono di partecipare a questo prestigioso appuntamento. So che il professor Odlyzko ha iniziato a riflettere sul tema dell'erosione della privacy nella società contemporanea molti anni fa, molto prima che il tema diventasse oggetto di dibattito a livello mondiale. In Europa stiamo affrontando la questione attraverso la sentenza della Corte di Giustizia europea, prima quella sul diritto all'oblio e poi quella sul safe harbor. Hanno costretto un po' tutti ad aprire gli occhi sul problema, ma non hanno offerto la soluzione. Continuo a pensare che solo una risposta concordata a livello dei governi europei possa assicurare un livello istituzionale adeguato al problema e debba rappresentare la condizione minima per un'interlocuzione politica diretta con gli Stati Uniti e con gli altri Paesi. Continuo a credere che solo un confronto aspro ma leale con Washington passi da un confronto aspro ma leale con Washington passi lo sviluppo delle principali questioni che riguardano la rete, dalla tutela dei dati personali alla sicurezza, dalla net neutrality alla governance di Internet. Sono certo che anche dal vostro appuntamento arriveranno riflessioni e proposte in questa direzione. Buon lavoro, Antonello Giacomelli, sottosegretario alle comunicazioni. Ora, so having read the message from Undersecretary Giacomelli, the program of the afternoon is that Professor Odlyzko will give a talk of about 45 minutes, and after that perhaps we can have a small session of Q&A, and then after that a debate. I thank you very much for being here, Presidente Petruzzella, Commissioner Antonio Nicita, and Dr. Lattanzi, the Antitrust Authority, Communication Regulator, and the Privacy Authority. Thank you very much. And Professor Odlyzko, Andrew, up to you. Thank you.
Yes, thank you very much for this very gracious introduction, and thank you very much for coming to this presentation. So I'll be talking about the effect that erosion of privacy is going to have on the effectiveness of price discrimination and what effect that might have on the kind of efficiency or growth potential of the economy as a whole. So the main thesis is, first point is kind of widely accepted, almost truism. Technology is leading to fundamental changes in society. We see it, growing unemployment, all sorts of things are happening, globalization. At the same time, world as a whole getting definitely much richer, so people living longer and so on. So it's certainly not controversial at this point. But my claim is that in some sense, many of these changes are even more fundamental than people think about. That yes, there are these issues of joblessness or inequality, but I'm going to be talking about how the very basic mechanisms of the economy, of modern economy, operate, and to what extent they might be gummed up, by some of these developments. And in particular, that price discrimination, which is greatly facilitated almost by privacy erosion, and in fact almost requires privacy destruction, has a very important role in this transformation. Okay. Now, a couple of caveats. One is, in some senses, presentations US-centric. Most of the examples I'll be citing are from the United States, where I guess many Europeans would say that capitalism has run amok, and so on. But it's not quite the usual presentation. Perhaps you might hear from Americans. In a sense, at a very rough level, you might say Europeans tend to be concerned about privacy as a very basic human right, about the effect of erosion of privacy on political freedom and related things. For Americans, privacy is more of a kind of economic issue, the kind of value of privacy or value of information. Well, I'm concerned just on the economic point, I'm not discounting our concerns about basic human issues, the issues of kind of basic psychological well-being of people. There are lots of studies by psychologists and others saying how people really need some privacy, feel really satisfied and so on. I'm not talking about that. I'll be talking just on economic aspects of it. But again, I'm not taking just a point of view of who's going to be gaining or losing directly, but rather more deeply, how are these developments going to affect the very basic mechanisms that have resulted in kind of unprecedented creation of wealth over the last 2 centuries. And finally, I should mention that these are definitely my personal views, and moreover, I have a bunch of papers I've been writing on topics related to this one for about 2 decades. My first serious paper was 1996. I had some more recent ones. Some what I'll be talking about today will only be presented in a paper, should be ready in a couple of weeks. It's resulted in more recent research. I've been concentrating on the origins of modern corporate capitalism in the early 19th century, and that has given me new insights, greater appreciation for people like Marx and others, sort of in these cases. So those things are new. Okay? And so they have not yet been kind of exposed to general kind of public. So, to launch into the main topic of the talk, I find history extremely important. When you're dealing with a revolutionary new technology, working with just standard models doesn't work very well, and seems one of the few tools we have is look at the past, other cases of kind of essentially discontinuities in society. When a dramatic new invention shows up, how does society react to it? What effect does it have on everything? And in particular, in the 19th century, the big technology that affected everybody was railroads. If you look at, say, the amount of investment that went into that industry, it was giant. Okay? It was the first big kind of private enterprise. Now, what was interesting, again, very few people seem to realize it. If you look at the history of railroads, it's very controversial, especially outside the United States. This was less of an issue in Europe, where there was more regulation from the beginning, more of a constraint. There was somewhat more serious issue in the UK than continental Europe. It was much bigger issue in the United States, where you had essentially just private enterprise operating. And what you discovered, there was this huge controversy which centered on price discrimination by railroads. It's an exaggeration, but only a slight exaggeration to say that the popular politics in America of, say, the last quarter century of the 19th century was dominated by issues of railroad price discrimination. You know, the other big internal political battles over, say, slavery and so on, that was kind of done, that had been resolved in some ways. Now, what did people complain about? Railroads, and very often railroad price discrimination. And it's very important to remember, many accounts from the period talk about people complaining about the extortionate charges by railroads, but that was not the fundamental issue. Actually, prices, the freights that were being charged were going down. The real concern was about the unfairness of what the railroads were doing. And this led to the very first substantial U.S. government intervention in kind of the economy, Interstate Commerce Act of 1887. And if you read it, you see that practically all of the substantive clauses of it, other than the ones about how it's going to be organized and other things, deal with railroad price discrimination, forbidding various forms of such discrimination. And kind of my projection, based on both on general kind of economic trends, and general economic incentives, as well as this historical precedent, is something similar is likely to occur in terms of uses of information, so that even in United States business circles, there will be calls for greater control of how information is used. At the moment, and there's this big divide across the Atlantic, U.S. being much more kind of laissez-faire about what companies do with information, and within the United States, of course, this is not unopposed. Various consumer groups kind of are objecting to what is happening. Businesses, generally speaking, are saying, well, we can do all these wonderful things. Let us continue. My projection is that's going to change. That even businesses are going to get upset because that's what happened in the 19th century. Again, the key revolt against railroad pricing practices was led by businessmen, were farmers, but also various small and medium-sized companies or so. Big companies tended to strike their own deals. That's maybe slightly different story. Okay. So that's kind of what I expect. More lessons from the past. Again, this is something very worth keeping in mind. U.S. regulation of railroads, many people, I think, would agree, went way too far. It became kind of oppressive, extremely intrusive, and led to a very inefficient and sclerotic system. That change was a dramatic change that occurred 35 years ago, the Steggers Act of 1980, which was actually a very interesting phenomenon politically because it was enacted by a democratic administration, basically the kind of Carter administration that carried it out. Kind of Republicans, you'd think the kind of pro-business groups, they had never been able to push through anything like it. Democrats did. Okay? Out of basically financial crisis, need to, if they didn't do anything else, they would need to subsidize some of these railroads, and simply the system was getting very cumbersome. Almost total deregulation was imposed. Of course, that was assisted or enabled by creation of new competing modes of transportation, trucks, canals, pipelines, all sorts of things. And that actually did produce a dramatic improvement. Of course, our passenger kind of railroad service is horrible. Some of you may have experienced it. However, the American freight railroad system is very efficient. And so it increased its efficiency dramatically over these few decades. Okay. So one has to be careful about regulation. Again, history tells us regulation can run amok and kind of really gum up the system. So my conclusion is that quality of regulation may become a really critical factor and even differentiator among different countries on how successful they are. I'm convinced that there will be much more regulation. I will be talking a lot about the market, and in some sense I'll be talking about the dangers to the markets. In some sense I'll be talking about why we should be defending the market, but I'm not a kind of a blind adherent to the kind of marketarian almost religion that some people espouse, which says market is wonderful, will do everything for us. I'm just regarded as a very productive tool, which has produced much of what we have seen. So this was lessons from the past. Couple of lessons for the present. Just last month, there were two events which attracted a lot of attention in the United States, perhaps not so much here in Europe because it did not affect Europeans so much. One was that a generic drug saw its price rise 60-fold, practically. Okay. It's a generic drug, not protected by patents, and so on. A new company bought rights to this drug. It was a fairly small volume kind of business. A company that seemed to be doing fairly well. New operator bought it and borrowed a lot of money to do it, and to pay it, raised the prices almost 60-fold. Okay. Why was he able to do it? Presumably they could figure out they could squeeze out enough money out of it. Even though it's a generic drug, you would think there are no barriers to entry. But yes, there are barriers to entry. Well, you've got to get permission from regulators. If you're going to produce a substitute, you've got to do testing, you've got to prove that your drug is equivalent, is safe, and so on. That takes years. Furthermore, this company invested extra money in making it difficult for competitors to get hold of the drug. Okay? Namely, it's called controlled distribution, into details. So they are putting in more money into the cost structure of the system to inhibit competition, and this they figure out they are going to be able to be successful at it. The other event that attracted a lot of attention is the discovery that VW had been committing fraud for a number of years in its with its cars, programming them to produce good results when they are subject to test conditions, such as for emissions. Well, very interesting. For a variety of reasons. One of them is that you have millions of these cars out there. Okay? Why wasn't it detected earlier? Well, it turned out even some testing had been done a few years ago, but again, VW was able to explain it away as kind of irreproducible results, sporadic results, not the same conditions, and so on. They still managed to get away for a few years. And again, you see it in a variety of other contexts. You can look at things such as the fraud committed by banks in setting the world's single most important financial rate, London LIBOR, that's the London Interbank Offered Rate, and so on. It had been manipulated for a number of years. Okay? Some people are now going to jail for it, but it went on for years and made lots of money for people. Why did it take so long? This is a wonderful world of transparency. All the information is supposedly out there, and these prices are definitely visible, yet they managed to get away with it. Okay? Well, I claim that this is something that we'll see much more of. Okay? And this is, by the way, irrespective of regulation. Simply the incentives in the world are that we're going to be moving to a situation where various players will be seeking small choke points where they can control it and extract a lot of value from it, and also by cheating, one way or another. At least not cheating, at least obfuscating what they do. And what I mean by choke points, again, this works even in cases less nefarious than the case of the Deraprim price rise. Consider Apple, the world's most valuable company right now. Most of its value derives from the iPhone, and most of the profits that Apple derives from the iPhone are due to the App Store. Okay? All those apps is what keep consumers coming back to Apple, buying the latest iPhones. Okay? Well, the App Store is essentially a choke point, and it's an accidental choke point. When iPhone first came out, Steve Jobs thought that the apps would be created by Apple employees. It took about a year for him to open it up to outside creators, and success followed. Okay? And you have these lots of people developing apps, and when you look at the actual numbers, you discover that most of the app developers are losing money, or making very little money. Apple manages to extract the great bulk of all the profits from the apps, okay, by selling more iPhones. Okay? Again, nothing nefarious, just that Steve Jobs, certainly a very clever, very creative individual, stumbled into something which let him and his successor extract a lot of value. Okay? I think this is what people would be looking for, and I think if you look at much of the activity in Silicon Valley about various startups, they are seeking something along those same lines. I mean, Facebook or social networks and varieties are along the same lines. Continuing in this, on the same topic, so you can view it, you can be upset about it, you can be amused by it, but you can also look at it and say there are positive sides to it. One is there's all this worry about lack of jobs. Automation eliminating jobs, not just manual jobs. I think everybody agrees that almost all factory jobs are going to be gone, or robots are going to replace them. And now all this work of Brynjolfsson and McAfee and others are saying maybe half of white-collar jobs will be eliminated. All those people kind of chasing around for references in documents, in legal documents or other things. You can automate them either, you can eliminate them either by automation or else by sending the jobs over to India and so on. Well, there is an answer to it. Well, how will people be employed? Well, fooling other people or detecting fooling. Okay? And this is a little bit of a joke, but only a little bit of a joke. In fact, the evolutionary biologists, many evolutionary biologists, will tell you that's how human race acquired its intelligence. Our predecessors, maybe before there was something that might be truly called Homo sapiens, had lots of enough intelligence to kind of outwit the lions, and the zebras and such like. Okay, why did they move ahead? The claim is that it's because they were in social groups. There were these advantages. On one hand, in detecting cheating, making sure that social solidarity was observed. On the other hand, in getting away with cheating. Okay, so that's a slightly positive view. Moreover, again, along the same lines, something that's important to bear in mind is that, in fact, one of the forms of deception that seem to be really important for human race, even for the technological and other progress, is self-deception. Okay? People have exaggerated ideas about themselves. Okay? If you ask, this has been done in a variety of populations, it doesn't change, with culture, not very much anyway. If you ask them about various desirable qualities, are you above average in intelligence, honesty, kind of good driving, other kinds of good looks? 75% are above average. See, I'm from Minnesota. That's the state where all children are above average, so I can sympathize. But this is a more generic phenomenon. And that really seems to be one of the driving mechanisms behind the success of the economy and one of the advantages of the market and market capitalism, namely lots of people, when entrepreneurs, go into the business and work extremely hard because they have exaggerated notions of the chances of success. And we all benefit from it. Okay? So anyway, that's something worth bearing in mind. So, modern economy, just a couple of points. So, I'm talking modern economy roughly last 2 centuries. If an ancient Roman came to life in the Rome of 1800, he or she probably would not really feel all that out of place. There would be some changes, but not dramatic ones. Somebody from 1800 coming alive today would find this world almost incomprehensible. Much of the progress, much of what we see around us today is really the kind of fruit of the work of the last 2 centuries. And you see it in all sorts of statistics, but you can also look at human life, how it was conducted, and you see that. And you see it in longevity and other measures. And this progress, almost certainly, for all that people can figure out, was due to a large extent to use of the market and of corporations. Okay, market mechanism and also corporations to assemble large amounts of resources towards complicated endeavors. However, this is again something few people realize: dominance of the market in the economy. Because capitalism simply refers to private ownership of means of production that has been with us, for a very long time. Not quite universal in different societies, but certainly very frequent. But the market, again, the elements of the market you can discern even in ancient times, in history we find, but the dominance of the market as a governing mechanism of the economy, that is really recent, only within the last 2 centuries, really. It's not a natural phenomenon. It was really imposed on societies by governments, to a large extent. And so I study nowadays primarily early British 19th century developments. You can see how the market is being pushed further and displacing some of the older mechanisms which involved more of social concerts or social interaction. So, and market, generally speaking, is disliked by both people and corporations. The beauty of the market is that it forces, say, the sellers to concentrate on, say, quality or price of what they produce. Okay? If you don't produce something that's good enough, well, tough, you go out of business in that case. People don't really like that, so that doesn't fit human nature. It's also disliked by the public. People don't like being kind of a commodity labor and so on. People are a very social species, and they really like to have stability, they like to have social relations, and we see lots of revolts against the market, and we see how people react. Corporations, when they kind of justify price rises, almost always justified by some often kind of opaque reference to costs, which are often nonsensical, clearly can be shown to be kind of immaterial, but still that they try to justify it. If you look at the, say, early church fathers, St. Thomas Aquinas and others writing about the economy back 1,000 or so years ago, I think what they came up with, their notions of a just price and related doctrines, were much more attuned to human nature. Unfortunately, they conflicted with the basic economic requirements. If you look at the basic economic logic, that one really kind of points the way towards a market. So you have this ongoing conflict between human nature, okay, and markets. Okay. So the markets are not so natural, and so in particular, while these marketarian advocates often say that let's just get government out of it, and then everything will be nice because markets will take care of it, I think they are just delusional in some sense, because in the absence of kind of regulation, society would fall into old traditional patterns, closer to things like feudalism or so. And so, by the way, as I said before, I'm not kind of unaware of the problems the market causes, but I'm also kind of viewing it as an essential mechanism for much of the progress that we have seen. Okay. Now, the problem that I see developing is, of course, the market in the kind of form that Adam Smith, say, presented it, which was a very nice intellectual creation, kind of very nice kind of toy model, lots of appeal, and it sort of works well. You might think of it working very well when you have lots of farmers competing, say, to supply lots of bakers, or lots of millers and lots of bakers and so on, lots of small agents interacting in this impersonal market, and then supply and demand setting a price, which then results to adjustments kind of in supply and demand. Of course, we know that's not the case. The market principle has been distorted in various ways, largely because, again, people did not like what it was producing. Case. But now I see a big danger to the general, even the very basic functioning of the market from the price discrimination, which eliminates the notion of a market price. If you don't have a single market price, you no longer have this adjustment of supply and demand. So, in that case, you're in a different world. And then what you're likely to find is, again, slipping into a new formats where then maybe closer to, it won't be exactly feudalism, I can't predict what it might be, but it will be where sort of various social type relations will dominate. And we again see it, and then talk about this dislike of corporations for the market. We see examples of it even in the very forefront of the high-tech industry. Not sure how many people here have read about the conspiracy that was found involving Google, Apple, and Facebook, and a bunch of other Silicon Valley companies to avoid competing for engineers. Okay? They had an agreement in force for a number of years that they would not hire away engineers from each other. Okay? Well, that was brought to light. They actually paid some fine. They managed to avoid a big court case in that case. Well, what's interesting is here are these companies which are extolling the virtues of the market, how they are going to be innovating and doing various other things, yet they are acting against the market. They don't like a free market in engineering labor. Okay? And why don't they like it? Well, it was a very nice quote from one of the leaders of these companies saying, well, he really didn't want to upset the pay structure of his company. Okay? So, in other words, for the efficient engineering of these companies, they want to make sure that all the employees are working harmoniously and they don't want to distort the pay structure. Okay? Social concerns really dominate. Okay? And just a reflection of human nature. People are very social animals in that case. Okay? So, and then what we find is, as we move ahead into this brave new world, we find that social interactions crop up in all sorts of places and tend to displace the market. If you look at those currency traders who are manipulating the markets for either for currencies or for loans, you discover that it was actually a fairly small number of people who knew each other. Often they were located across the world. The guys in New York, London, and Tokyo knew each other very well, either for personal interaction or just from exchanges of mail messages. And much of what they were doing was returning favors. So in other words, the prices that you saw were often the reflections of what one particular trader felt he owed another trader for some favor that maybe a third trader gave him, half a year ago, something like that. Not a market operation in that case. Again, dominance of social interactions is what we observe. So modern economies, I mentioned, I think, is in danger of kind of moving away from some of these key mechanisms. I'll talk more about them later. As we move into this direction, I think that a bit too much attention is being paid to the dangers that are arising from the widely known platform providers who seem to be establishing monopolies. Companies like, say, Google, Facebook, or Apple. Okay. Instead, I think quite a bit more, I think there is danger there, definitely. I don't discount it. But I think quite a bit more attention should be paid to all the danger of uses of the data collected by many smaller players. Here's an example. So, US-centric, because it relates to myself. I subscribe to New York Times and Wall Street Journal. Discovered just last week and a half ago in London, with talking to a friend, that she seemed to be paying much less for New York Times than I am. Both of us subscribe to New York Times, so on. Well, okay, I have to inquire into it. Another example, similar lines, I also subscribe to the Wall Street Journal. That a year or two ago, my subscription expired. They offered to renew it at twice the rate. I refused, cancelled. They kept reminding me that my subscription was about to expire, it has expired, kept sending me the paper for a while. I just kept refusing. I didn't want to pay twice as much, so they stopped sending me. I just lived with it. A few weeks later, I got a call by phone offering to renew the subscription at the old rate, okay, which I accepted. Okay, so this is price discrimination, finding people who are willing to pay more. Okay, and so much of what's really driving information collection, I argue, and I have been arguing for a long time, is driven by the incentives to price discriminate and the extra information enabling the sellers to figure out how much they can charge. Okay? I mean, advertising is not very effective. There's not all that much money is being spent on advertising. Being able to jack up price to somebody by a factor of 2, that has a very noticeable impact on the bottom line, very, very visible. Okay? So, I think the worry is that it's the New York Times and Wall Street Journal, with or without the assistance of Google or Facebook, will be able to figure out just how valuable I find them. So, and then be able to insist on my paying that price. And this is going to grow. At the moment, I'm getting both of those papers in print. I also get access electronically, but I don't use electronic version very much. I mostly read print version. They don't really know how much I value them, right? I pay, so I do pay the fee, the subscription fee. I read it, but they really have no idea directly what I do. Now as we move towards electronic format, I expect I will do soon because the electronic readers are getting better, now they'll know exactly what I'm reading, how much time I'm spending on it by purchasing the data or trading for it and so on. They'll probably learn what else I read. They'll know exactly how much I value them, and then they can insist on my paying it. So this is the big promise of big data for corporations. Not better targeted advertising, but being able to squeeze more money out of people. Okay? And you see it, and again, this is not necessarily negative. Okay? You see it through this company that jacked up the price of this generic drug by a factor of almost 60. It offers to provide special concessionary rates for poor who cannot afford to pay it, and according to press reports, they're actually pretty good at it. Okay? So from a social standpoint, that's pretty good. Government doesn't have to get involved. The government doesn't have to pay for these expensive drugs for the poor if the company provides them to them. Okay? A hidden mandate, in effect, or a hidden hand doing it for the government. Okay? So there's great temptations for the government to go along with such moves. And I'll show you some more examples. Now, on a large scale, I suspect that much of what we see in the economy, that kind of seems almost pretty paradoxical, may be a reflection of precisely such moves. So what we find is several things. One is, well, extremely high corporate rates. In the United States, they are record levels. At the same time, you have very low corporate bond rates, or long-term, any kind of long-term bond rates. Now, Wall Street types, financial analysts tell you that's natural. Generally speaking, low interest rates have been good, for profits, but that's only short term. In the long term, the two should be moving parallel. Yes, you expect there will be some premium for equity because of greater risks, greater volatility, but overall, whether you're paying interest or you're paying dividends on equity, you're paying for capital. And by the way, in the 19th century, all the people I have read, they understood it very well. English observers of that time said, yes, our interest rates and our corporate profits are low because we have lots of capital. And in America, both profits and interest rates are high because America is a developing country, needs to import capital, etc., etc. They knew that interest rates and capital profit rates are going along together. Somehow nobody seems to be paying attention to this paradox that we observe today. Furthermore, what we observe is you have these low interest rates, high corporate profits, but you have low capital investment and low entrepreneurial activity. Now, some people explain it as grounds that, well, there are little opportunities. Well, there are lots of opportunities in competing away these abnormally high corporate profits. And by the basic logic of capitalism, there should be lots of people somehow scooping up this low-cost, long-term interest rate money, okay, with the assistance of investment banks to packaging things up appropriately and so on, and competing away the high profits. Yeah, that's not happening. Okay? And I think this may be a reflection of kind of greater effectiveness of current organizations in exploiting data, being able to lock in their customers and also block competitors. Now, as I mentioned, price discrimination is really very important to it. Price discrimination plays a very important role. People don't discuss it very much because much of what is practiced is hidden. And it's hidden largely, I think, because corporate managers understand, if not explicitly, then maybe implicitly and so on, that it's very dangerous to reveal what they are doing, because again, it seems to offend human sense of fairness. Again, the U.S. reaction against railroad pricing in the 19th century is a perfect example of it. But again, if you take a historical look at pricing, especially in telecommunications and transportation, it's very clear. This was pricing was a key element in development of these industries, very often more important than technology. And we see that policymakers, decision makers, understood intuitively how important it was and put limits on it. And this happened way, way before, thousands of years before the economic logic of price discrimination was explained by the French economic engineers in the 1840s. And so I think that again, much of what we see in commerce over the last say, 1,000 or so years, is this kind of competition, the economic incentives to price discriminate in order to improve the efficiency of the economy, to spur production, and working against fairness on the other side. And what that resulted in all sorts of kind of maneuvers, compromises, various compromises. Here is an amusing cartoon from Punch, kind of English satirical weekly from 1869. This is kind of British railroads kind of imposing these tariffs for different goods. And here is this lady with a whole load of animals comes through, and the porter tells her how much she's going to pay, and he tells her that cats is dogs, and rabbits is dogs, and so is parrots, namely in terms of the tariff rates, but this tortoise is an insect, and so there is no price to be paid for it. Okay? I mean, people often complain about the absurdities of government regulation. Again, if you look at the U.S. railroad regulation, after World War II, some people had computed there are some trillions of different rates that you could compute, and that clerks were spending all the time chasing around looking for the right combination of things to minimize costs, so on. Well, you had many of these absurdities showing up in private sector before, again, trying to cope with this finding a kind of compromise between efficiency and fairness. Now, talking about the advantages of price discrimination. So, I'm not talking about this is well known. I'm kind of assuming that most of the people here are involved in regulation one from another. I assume it's understood the basic logic of price discrimination, why it usually increases output. Now, what its effect is, kind of beyond increasing output, that varies. In different situations, it can be better for the consumers. Some guys may be better for producers. It depends. But what I'll be talking about now in the conclusion of the presentation here is a fundamental danger that price discrimination imposes, namely how it could gum up the kind of basic energy that powers the market economy. But it is very tempting. Here's an example. Again, this is related to open access. So this is scholarly publications, technical science, technology, medicine kind of publications. That are written mostly by academics, mostly for other academics, but which are kind of key to developments of technology and so on, important for for technological progress. This is U.S. based and U.S. centric, taking data just for the United States. What you find in here is the number. So if you read the literature about open access, and I've been involved in it, by the way, for just about 20 years. 22 years. There's voluminous literature, and you hear constantly all these complaints about these extremely profitable companies. And by the way, this is not U.S. People complain about U.S. Companies like Google and Apple dominating things. In scholarly publishing, it's mostly European companies that are managing to extract a lot of values, Elsevier, Springer, and such like. So the constant complaint that you hear is that publishers are jacking up prices well ahead of inflation and are kind of destroying library budgets, and things are going to pot. Okay? Well, if you actually look at it, what you observe is that, say, over the last decade, there has been a dramatic improvement in the availability of this information. Yes, there has been some improvement, some increase in the revenues and extremely high profits. So Elsevier's profit margins on scholarly publishing is highest of any of its business segments, around 40%. Very, very profitable. And they basically control a choke point. They put in very little into it. The research is done mostly paid for by public agencies, and of course by the scholars, mostly the professors and professor students. The writing is all done by the professors and the students. The refereeing, the key role that peer review plays in actually reviewing, making sure that something is not totally crazy at least, and hopefully even valid. That's done for free by academics. What do the publishers contribute? Actually not very much. They used to in print. I mean, it was really difficult to actually typeset, copy edit and typeset and print and distribute all those copies. Now it's basically electronic, but they still control it, control this choke point because of the tradition and the reputation of these journals. Yet, even in spite of these complaints, what you observe is that the world, at least the scholarly world, has benefited tremendously. There has been a huge increase in the availability of information online. Then we've now gone away from print, where you had relatively high marginal costs of printing and distribution. We moved to just electronic distribution, much less expensive. So now they are selling, so there are subscriptions in large bundles. And so even small colleges can now have access to large volume of literature. Okay? And that has led to a much more equitable distribution of access. So here is another chart drawn from the same data. Here what you observe is what, as a ratio to the number of journals that are, which of course has gone, so the denominator is number of journals received by the median large academic library in the United States and Canada. Okay? So that's the number, the gross number of that median has gone up. As I mentioned, all the major libraries like Harvard, Princeton, they benefited tremendously too, at a modest increase in price. But now, in addition to this general improvement in access to information, what we observe is that the libraries at the top of the heap, with a big budgets, they have less of an advantage than, say, the median or small ones. Okay? So, progress. In terms of, say, a regulator, you can only applaud. Information has become much more available, and much more equitably available. Now, but on the other hand, it has still locked in all those unnecessary profits of Elsevier. There are ways to produce academic journals at a much lower cost. Okay? But it's not happening, again, because of all the inertia in the system. Okay? So, I think that we're definitely progressing. In that case, there is certainly much more that can be done. Now, what I feel might be happening is if you take the kind of logic of price discrimination to its extreme, where now essentially all the producers find out how much you're willing to pay, that is essentially equivalent to abolishing rule of law and kind of secure rights of property. Now, say I'm a seller, I learned, Signor Quintarelli, your latest IPO has done extremely well, so now this aspirin that you need is not going to cost you, say 5 cents, it's going to cost you 50 euros. Okay? Basic economic logic argues that should be done. Okay? Why shouldn't Bill Gates pay $1 million? Okay, for a pill, for an aspirin pill or so, he can afford it, right? And might be better for the world in that case. However, what I'm kind of concerned about is that yes, if you go in that direction, you are now going to upset people. Okay? Sense of fairness. First, one of the big issues is that when you do implement price discrimination, it's very hard to do it fairly, at least ways that are perceived to be fair. Actually, we have very interesting examples from the academic publishing scene where these big bundles are sold by companies like Elsevier at wildly different prices, even to essentially equivalent universities. And people have done these exercises. They find pairs of universities with roughly same number of students, similar disciplines, similar level of research activities, and a number of researchers there, yet they pay wildly different prices. Okay? People get upset about it. Okay? And then if you don't have a feeling of security, you don't know how much you're going to be able to keep as a result of your innovation, well, then your incentives to innovate decline. And of course, then the barriers to your innovating and being able to break in are getting to be much harder. if the established players have the information, they know how to counteract your moves, your entry into the market more efficiently with appropriate pricing, it's very hard to compete. In fact, again, a simple illustration, a couple of years ago, when the Federal Communications Commission in the United States was trying to assemble data about broadband availability, some of the small players, especially wireless ISPs, were really upset. They didn't want to provide the data because they were concerned that if those became publicly known where they're providing services, then the big players would know where to go in and offer, competing services, undercut them or so. So certain amount of opaqueness in the markets, I think, is very important. So my general kind of conclusion is there is great promise in general for economic progress, but I think there is danger that the basic incentives that kind of drive the market economy might disappear because the market will disappear. There won't be a market. Okay? And now you'll be in this kind of opaque world where just the people with the control of information will be doing maneuvers which will again discourage people from productive work. Okay? And I think regulation on use of information and pricing is likely to increase even in the US, but it'll be very hard to come up with good forms of it. I mean, I do not claim to have a silver bullet, to have a nice prescription for doing it. And I have some papers and another paper which will talk specifically about the kind of foundational logic of market capitalism. Will be read in a couple of weeks. If you like, send me an email. I'll be happy to send it to you. Otherwise, thank you very much for listening.
There will be no markets, so Professor Pitruzzella will be unemployed, but not that soon. I apologize for being a terrible host. I failed to mention that Professor Cardani, the chairman of AGCOM, Italian National Regulator for Telecom and Media, has a personal issue. He could not be here, while Professor Soro, who is Dr. Soro, who is the chairman of the Privacy Authority, is busy in Brussels because they have a meeting about the safe harbor detail, and so he could not make it. He wanted to come, but he could not. I know that Mr. Pitruzzella has to leave, Professor Pitruzzella has to leave, so perhaps I would suggest if we can make a panel now, and then we spend more time with the questions to Professor Odlyzko and to the remainder of the panel. And I failed to present, to introduce to you Professor Francesco Sacco from the Università Bocconi, and he's an economist. He's one of the experts of our government for technology-related, economics-related issues. So please, Francesco.
Okay, thank you for the introduction to the moderator. I will be a very transparent moderator in a so complex discussion. I think that the largest shareholder of all the discussion is for sure Professor Pitruzzella. So my first question in the panel is for Professor Pitruzzella, President of the Italian Antitrust Authority. So, President, what is your point of view as an authority that has the mission, the defense of the market regarding this so provocative thesis from Professor Odlyzko?
But I think that all the antitrust agencies all over the world have to face a big challenge, how to manage big data. And if our toolbox can be used to manage this new phenomena. And it's a great challenge. It is clear that data revolution is affecting markets, their structure, the competition process, the efficiency of market outcomes, as well as their fairness. Power in the digital economy derives in part by the degree to which a given company can collect and diffuse personal information. And data-driven markets can lead to a winner-takes-all. And data-driven markets can generate the price discrimination. And for us, the question is, Can an antitrust agency use the concept of abuse of dominant position to sanction this kind of behaviors? The problem is that we can use this concept only if there is a dominant position in the market. And so we can act when we have to face Google or Amazon or so on. But, as Professor said, too little attention now is paid to all the other actors who are able to use big data. The phenomenon is wider. And perhaps we should rethink market power. We could reshape the concept of market power in order to use the ownership of big data as a symptom, as a way to reshape market power. And I think it's a big challenge for our agencies in the time being. The question now is that in our economy we can have a lot of fishing for pools, as the book of Akerlof and Schiller, as the title of the book of Akerlof and Schiller. Fishing is not necessarily legal practice, but it is about getting people to do things that are in the interest of the fisherman, but not in the interest of the target. And perhaps consumer with price discrimination can be a fools for which can be fished, can be appunto a fool which is successfully fished. And so it's a big challenge. There is a great debate in the European network of European agencies about the reshaping of market power, and I think that the speech of Professor Odlyzko could be a good base for a for an improvement of our concept. Thank you very much.
So I think the second largest shareholder is economics. We have here at the table Professor Nicita, who is a commissioner of the Communication Authority, the Italian Communication Authority, but also is a professor of economics. So using price discrimination on a so large base has many consequences in terms of efficiency of markets. Which are your thoughts about it?
Okay, thank you very much. First of all, let me recall the main argument that we have just heard, because it contains actually some new insight, but I would like to be sure that I have understood deeply, also relative to both standard or let's say mainstream economics, and also the new form of economics like behavioral economics that actually is growing of importance precisely in these respects and domains of price discrimination. So the main argument of Professor Odlyzko, which is very, very challenging, is the following. We come from a story in which we had, let's say, in traditional or pre-digital markets, price discrimination as a general practice that has been used somehow in different markets. Okay, of course, there are several ways of having a price discrimination. The simplest one is that you just fix different price for different customers. And there are several efficient ways to do that. For instance, the simplest one is when you have different consumers located in different distance in the market. So you have to take into account the cost of transportation. Other way, a little bit more complicated to price discriminate is to promote an implicit price when you have, for instance, different products bundled together. So there is an implicit price of the bundle for which, if the preferences of final consumers are shaped in a given way among the goods that are bundled together, then by doing price discrimination, you increase efficiency because you induce a wider demand to purchase the final goods. So bundling is increasing efficiency according to standard economic theory simply because it allows more consumers to buy more goods and then firms to produce more goods and so on and so forth. Of course, this is true only under given circumstances. I just mentioned for economists, which are negative correlated preferences among the goods. If we have time, we can go deeply on understanding that. So it's not generally true that price discrimination, also through bundling, is increasing efficiency. It is true under given conditions. But so we come from a study for which price discrimination is a way to increase efficiency. And in economic theory, we had two opposite situations for having the same level of efficiency. I'm talking really textbook economics. The first one is the ideal type of perfect competition, for which you have prices equal to the marginal cost of production of economic goods, and you have that all the demand is satisfied in the market as long as the price set in the market is equal to the marginal cost of production. On the opposite side, we have another situation which is precisely the same in terms of overall efficiency, which is monopoly with perfect price discrimination. What is the difference? In one case, you have a price, the lowest price equal to the marginal cost of production when you have perfect competition. In the opposite side, when you have a monopoly with price discrimination, perfect monopoly with price discrimination, you have the singular circumstance for which the monopolist in a given market is pricing precisely to each of us the maximum price we are willing to pay for a given good. So all the difference between the marginal cost of production and the price that is charged to each of us is gained by the monopolist. But from the general point of view of the allocation of the economic goods to the markets, the two configurations are exactly the same. So if we just look, turning to your question, to efficiency, we should say it is precisely the same. But what is the nice insight, I think, of what we just heard, is that this is true if we just focus our attention to a single market, to that market. So we distinguish, as normally economists do in mainstream economics, between efficiency and distribution. So we say, from the matter of efficiency, it's the same. Of course, there is distribution of rents between final consumers and the monopolist. But what is your interesting point is that if you focus just on a single market, so if you have, for instance, monopoly with perfect price discrimination, and the monopolist gaining all the rents, then there is no any more rents to be spent by consumers for other goods in other markets. So one thing is efficiency under a partial equilibrium story, so we are just looking at that market. Quite another thing is the situation for which you are just taking rents from consumers who will not be able to consume in other markets, which is a sort of general equilibrium approach. So its final conclusion, for which be careful that price discrimination may destroy markets, goes precisely also in this way. Try to say you will not give any more to consumers from the one side and to firms to the other side, the space, the economic space to build the new markets, to build the new goods, and to, push the overall economy to grow. But he raises another interesting point, I think, which is the following. Normally, in mainstream economics, we assume that if you are able to discriminate as a producer, for instance, you have the right information on the maximum price that consumers are willing to pay. Or, if you have not this information, by making different offers and observing final consumers. Through their revealed choice, you can build up a theory of their preferences. So, in a sense, price discrimination is related to the ability of an information capability that producers have. On the other side, this generally is coupled with the idea that the consumer is perfectly rational, so he's able to calculate, to maximize his utility, and so on and so forth. But what if we are living in a world in which information is incomplete, both on the producer side and on the consumer side, relative even to themselves? Then, the maximum price we are willing to pay is something very difficult to define, even for ourselves. So, led to an extreme, this argument would mean that it is as if we live in a continuous auction, in a world in which we have continuously to choose how much to spend in alternative choices, while we really do not know what will be the maximum price we would be willing to pay for each choice. So it's like as if our life is continuously put in a sort of auction for which all our choices depends on what we have to choose. So on the one side, we will have different options for different expenditure in alternative markets, but from the other, we are continuing in a situation in which, especially if we are a little bit banded rational, we are not able to allocate our expenses in an efficient way for us. So we are induced to pay according to our preferences of that moment. And so we are exposed to advertising and so on and so forth. This is a nice argument because it is as if we would like we should have to continually asking to ourselves, what would be the maximum price I'm willing to pay for that? And this is something that maybe we simply don't know. For instance, if you, at the extreme of this argument, there is a ransom, what will be willing to pay for a member of our family that has been kept by someone else and is asking money for that? So, if we put this to an extreme, it is possible that we would end up in a world in which we really don't know what will be the right price for things. The markets, the competitive market, the evolution of markets precisely perform this function to reveal the market price, to reveal the prices raised by competition. So to give to final consumers benchmark for the right price according to the collective action of all the other consumers for the same goods. So the extreme of the world that is depicted in this theory is that at the very end we are losing also the ability to compare prices, to understand what is the driving force of collective action, which is one side that you should add in your argument, because competition is also the ability of collective action to induce the best opportunity to raise. A collective action which is uncoordinated, so the collective action of consumers is nothing. So at the very end, I think that it is nice, this idea of saying that if we are in a world in which we are somehow captured by someone who has all the information for us and is continually offering to us choices, maybe bundled together, and we are not able to compare these choices with other choices because we are in a world in which, for instance, we have access to a website or to a portal or to whatever, and we have already all the possible choices around us, and that are just a click away from ourselves. On the one side, we are induced not to search anymore. On the other, we have not the ability to compare with other offers. So there is this sort of fundamental transformation from market to monopoly through informational capture. And this is a nice idea to be connected with your point, because it is as if in the antitrust words, we could say it is as if these words depicted, it's like building informational aftermarkets. So I have ex ante competition in the market, but then when I have been captured by informational rent by someone, then there is a relationship which is not many to many, but is one against many and one to one, but I'm completely captured by the other informational rent. So how to get out from there? This is the point at which I need some more insight by you, because I understand this evolution is a little bit a problem to find the alternative, because it's not simply to say we want markets, because markets are not given for free, and this is why we have antitrust authority as well. So it's not easy to say we want to have markets, we want to have single price for single goods, we want to have single markets with competition. It's not that easy, the way in which we are organized our digital capitalism today. So while I appreciate and I share your view that we are going into a world in which the more and more competition is transformed into informational monopolies. But how to get out from there, also from a regulatory point of view, it's quite difficult. What should be the degree of paternalism over there? What should be the degree of not giving these opportunities to all the people? I don't know. This is an open question. One point that maybe it is missing is the following. Maybe it would be nice to add to your perspective the other side of the story for which we as consumers are the product, because we are producing information through our choices in the digital economy. So maybe the idea of trying to redistribute power between those that have informational rights and the owners of that knowledge, the final consumers, the product, maybe is one way to find a possible solution to get out from this paradox. Thank you.
Really interesting. The problem is how to redistribute this rent. But again, back to the title of the speech. The title of the speech starts with the word privacy and price discrimination and seeds of capitalism destruction. So, back to the table. We have Dr. Lattanzi from the Authority for the Privacy and Control of, the Protection of Data. So, what is your point of view regarding the control of data that will be used for price discrimination, and what is the European regulation point of view?
So thanks a lot for the question, but let me just say in advance that I am speaking in my personal capacity, as Dr. Soro is not here, and just giving a perspective from a data protection point of view. The second caveat, if I can, and I couldn't deny the invitation of Dr. Soro to join this meeting, so I'm a bit between a rock and an hard place. But I would like personally to thank the Intergroup for Innovation for organizing in an institutional manner this conference, as we are trying to put together the different dot. My background is totally different. It's not in economics, so it's purely legal, and my expertise, I would say, is if it is in the data protection issues. So as institutional body, data protection authority doesn't usually take care about the topic that we are discussing today. So price discrimination, or better, price differentiation, as price discrimination in Europe, discrimination in our language has a negative connotation usually. But I would like to start from some assumption of Professor Odlyzko, and not only for the sake of hospitality, as some of your sentence can give to us some useful dots. So I will be quite rude in quoting you, but you please exercise your right to control that I'm not treading your thought. So, when privacy or data protection is relevant in the issue of price discrimination, not in the moment where the price is fixed, but just one moment before. And Professor Odlyzko, I quote, says, privacy intrusions serve to provide the information that allows sellers to determine buyers' willingness to pay. So information is the key element in order to determine in a dynamic way, and I insist on the online world, not on the offline world, to fix the price. The powerful movement to reduce privacy that is coming from the private sector is motivated by the incentive to price discriminate, to charge different prices to various customers for the same goods or services. If transactions are conducted anonymously, it is protecting the identity of the individuals, it is hard to tell how much a buyer is willing to pay. But the point is that when we are moving in internet, and particularly within platform in internet, then anonymity is, I would say, is a difficult word to define, even if we try to maintain some form of anonymity. I continue just for a moment with Professor Odlyzko, and he says that the logic of price discrimination leads to an Orwellian economy in which a package of aspirin at a drugstore might cost the purchaser $1 if he could prove he was indigent, but $1,000 if he was Bill Gates. So, and we are going in the online economy exactly in this direction. The point is that the result is likely to be that price discrimination will grow, but in a concealed form. Why price discrimination, especially online, goes in a concealed form? As consumer doesn't like this kind of price discrimination. And it can raise also political issues and the intervention of regulators in some cases. So, starting from this point, from this assumption, I will say that also data protection issue is an issue within the price discrimination topics. But not when we fix price, but one moment before through what we usually say is the problem of profiling, especially online profiling. And when we're speaking about online profiling, then we are speaking about issues that are directly related within the European Union landscape, obviously, not in the US. We are directly speaking about the data protection issues. And here we find that there is a sort of gap between the two sides of Atlantic. As one of the basic principles of the data protection law, both at European and national level, is the principle of transparency. And what is lacking, in my view, and in your text, if I can assume it, is that this kind of exercise that leads to price discrimination is not always clear, is obfuscated, is in a penumbra, if you want. So the logic behind the data protection rules is that the individuals, so the data subject, has a legitimate ground to have some information about how its own data are used, are processed. And the second point is that the kind of information that he should have relates directly with the logic of the data protection. So the rationality that is behind. What we used to call nowadays the algorithm that is used. And we have a problem about the use of the algorithm, obviously, as the algorithm is not known. And this is a burning point. I don't want to be too much simplistic, as obviously the algorithm is part of the know-how of the companies using it. But on the other side, the algorithm is the logic that are using the data relating to a given individual. And if, putting aside the case of a clearly case of bad discrimination, that has to do with, for example, sensitive data in the sense that it is used within Europe. But also in more simple cases, we can have bias in the figuring out of the algorithms that can have impact, influence on consumers and users. So we have this kind, using the data protection law, and in this sense I was saying we are connecting the dots. Using the data protection rules, seems to me that we can have a sort of clash with this kind of trend that is very strong and is a model business in the end. So just to come commenting your interesting lesson, I would say, and also your article, from a data we can recognize, and this is the reason why I was very interested in these price discrimination issues, that is not normally addressed both in legal literature in Europe and as well as in the data protection authorities' practices. We are not facing this kind of cases, even if we are duly interested in the issue of profiling. Staying on this point, I will give you a sort of two intermediate conclusion in one sense. One is that the data protection laws and regulation, again, are a sort of horizontal legislation. The German says a Durchschnittsmaterie. So they can enter in different areas of our life as they are related to personal data. But what is much more interesting, intriguing as well, if you want, is that we are accustomed to speak about data protection only thinking that we are defending, in one sense, true personal issues like private life, familiar life, dignity, if you want, identity. While in this case, exactly in this case, data protection issues are going directly at the heart of an economic transaction. So it's not only personality rights, as we are accustomed to learn at the university, but it is part of the engine that is moving our economy. And more it is true if the economy moves in the direction of the online economy. And this is one point. I was just sketching how many papers, but this is one of the points that is going to be discussed at the European Parliament and with the Commission concerning the agenda, the digital agenda. And I was looking to a couple of reports. The first one is of the Bundestag about Internet and Digitale Gesellschaft, and exactly this point rises through the lines. It's not clearly debated or depicted, as was said, but is emerging here. And just a couple of weeks ago, the French Parliament released a paper, a report as well, and one of the points is how to make sure that fairness in face of the consumer is made sure concerning platform. And one of the points is exactly how the price is formed using the data about the individuals. So for sure, this meeting is timely. And I think it's also a burning issue. Now, if I can just add one point, if you want, my 2 cents to this discussion is, and then, what can we do? As it's not easy, to be frank, to be honest, at least for me, to make the different pieces of the puzzle on the table correctly, but it's much more difficult to find a solution. Both, I think, from the data protection perspective, possibly, we were discussing about it, also on the other side. What is clear is that on the tradition that we have in Europe, And reading this, the position in Germany, France, one of the points that we don't want to lose is to have more transparency. We are speaking about algorithmic transparency. It's a joke, as the algorithm makes you transparent in one sense, or use your transparency, and the opposite side, we need to know more or less how it works. And then there is a de facto problem, is that individuals have not power enough in order to check the algorithm. There is clearly this disparity among powers. So we need to have intermediate body that can use this kind of information, can manage and can check in one sense. What is interesting is that the issue is not only relevant now for the European countries, but if you read the reports of the Executive Office of the President Obama, big data, sizing opportunities, preserving values, and then the answer that was given by the White House in the first months of 2015, of this year, then the title is interesting, Sizing Opportunities but Preserving Values. So there is a clear flag in order to say, take attention, we don't want to discriminate, to unfairly discriminate or unduly discriminate individuals, and even if we don't want to lose the opportunity of this new market. So I thanks so much for your coming here. Thanks a lot.
Thank you. Before having a final round of questions, I'd like to open the discussion also to the public. So if you have any question, the Senator, please. And I think after the Deputy Quintarelli.
Thank you. I have no specific question, just some consideration after the speech of Professor Odlyzko. I heard about the importance of regulation. In a common sense, is considered the opposite of the market, of the rule of the market. And you see how the opposite is the regulation that will make the difference for future development in the market. And it's not against the market, it's not the opposite. This is one thing that I consider. Because as you say, this at the end, without regulation, we will have low entrepreneurial activity. And this is something that we have for sure avoid for the future. Another consideration that I would like you to comment is that at the end, big corporations, you mentioned this case, rejected the market rules for their labor market because they avoid to hire engineers from each other corporation. I think one of the things for sure that they want to save cost and they want to save a hassle with the staff, but because at the end the engineers are the raw material of that they need to grow and to be in business. Without the right staff of engineers, they have nothing at the end. So I think this is to me, we have to think about what is the importance of the skills, the intelligence, the experience also of these guys. And we have to consider for our role in Italy the importance of the education and all this part of our culture also for our success, or the European success, or at least Italian success. And the last consideration, you talk about the sense of unfairness and I agree, because at the end we see with the price discrimination that the price are far, and they say too far, from the cost. The cost for you are completely different. The price are completely unrelated with the cost. And this is things that the people perceive as unfair. Let me give you an example. So we consider that we have a single market, European single market, but at the end you can buy a car from an Italian firm, I don't mention, but you can imagine that produce motor vehicle in Italy, but you can buy in a special offer that is today for 8,000 euros, but the same special offer in Spain is for 5,900. So it doesn't make sense because Spain and Italy are comparable situation for many. So why? I personally perceive that unfair. It's something that they have a bigger market share in Italy, they have a different story in Italy than in Spain, they want to enter in Spain. Well, I don't know really what is the real reason, but at the end they are perceived by the people as some special form of dumping, and this is why the people consider unfair. So this is my personal things and consideration after your interesting speech, and I thank you again for being here. Thank you.
Onorevole Quintarelli.
I have a question perhaps for President Petruzzella or Antonio Nicita. As an entrepreneur, because I used to be an entrepreneur before arriving here, and I still have some investment. I do some angel investing. Perhaps for the next speaker, for the next question, Luigi, thank you very much. I like to compete against other companies, and I like to compete, and of course price is a good part of the competition. But what happens if I compete against someone that has complete knowledge of the user and I don't? How can I compete? And that relates to the point that Professor Odlyzko was making before, the reduction of the incentives to compete. Then I need to find I say, I'm not going to compete against this guy because I have no possibility. I have to look for competition somewhere else. And that reduces the possible market spaces, meaning that the perfect information about the customer is an asset like money, like even more than money, even more valuable than money. So how can we open space for competitions for new companies that want to compete against companies that are in an advantage position of having a perfect knowledge of their customers? This is the question. I mean, very easy.
Not really easy, but it's a question for sure. So, any other question from the public? Okay. Oh, Anna Masera? Oh. It's a provocation from... Any other rising in the end? Okay.
Question.
Okay, we can have a final round of answers and a final round of questions from me. For me, on my side, just one question, and then President Petruzzella and Antonio Nicita, maybe they can answer also to the question, and then the final remarks from Andrew Odlyzko as well. So my question is quite simple. This is the typical wicked problem. We have a problem that belongs to very different fields. It's a question of data protection and privacy. It's a question of antitrust. It's a question of control of communication activity. Okay. So how can we solve the problem? What's your idea? In 2 words. And then the reply. First of all, the president.
Yes, no. I think that this conference has been very interesting, even because it stressed the link between privacy and competition law and competition policy. So I think that we need a very deep cooperation between agencies, a competition authority, a privacy agency, and even the regulators in the telecoms. I think that for not only for Italy but for the European Union, it will be really a revolution, because the old habit is to work separately. No, everybody works in his garden without paying attention to what is doing the other agency, and it's a very bad habit. Anyway, we need also, as I said before, to reshape our concept, because, as you said, firms without access to consumer data maybe face significant barriers to entry. So, how can we manage this kind of question? Perhaps our traditional tool can be not very, very useful. As I said before, for instance, we have to rethink the notion, the concept of market power. The availability of a great amount of data is a new form of market power. While in the past, while now we are used to use another concept, which is the market share. But perhaps it isn't. It fits with a different kind of economy, but not with the digital economy. Anyway, in my opinion, as a first step, we need a very deep cooperation between different agencies, because they know what happened before the pricing, before selling, while we know what happened in pricing and selling. We have to put together all our knowledge and trying to coordinate our activities. So I hope that next time we will meet together to launch a common investigation.
Very good.
Professor Nishita.
Let's take this invitation by the President of Antitrust, saying that we will be happy to start an investigation together. An investigation in terms of a general inquiry on the evolution of the markets. And I think this is really very important because it would put together platforms, understanding, individual choices, evolution of the markets, just to understand what's going on, and then case by case try to understand what to do. Maybe even coming out with guidelines. Just for instance, would be a great progress. Just theoretically, I would just add two very small issues. First one. Answering also to the question generated by Stefano Quintarelli, ciao, and also by the first intervention, is the following. First, it is true that we can have a form of prices that are completely separated, not only from costs, but even from economic rationale. For instance, you can have two different policy strategies and price strategies for tickets. So if you go to take an airplane or to make a reservation for an hotel room, just at the very end of the day you need it, to travel with the flight or to go to the hotel. You can have two opposite choices by the supplier that have two different perfectly rational economic rationale, which are the following. The first one is last minute. So, since it's the very last minute, if I don't sell my room to you, my room will be empty. I will give you a low price. But on the other side, if it is really the last minute also for you, then of course the opportunity for you to find another hotel having a room is very high. So you have two completely different economic rationale, which are, have both an economic rationale, setting the maximum price you're willing to pay, or setting the lowest price. So this means that we really are in a world where the relationship between the customer and the provider is very important. Just I would like to mention that the question of the exclusivity of access to data is fundamental. Actually, this is the new essential facility. We have been used to organize and regulate markets as traditional access to the network, which is essential to enter into the market. Of course, big data are the essential facility for the future. My suggestion was to say that there is, before just saying that there is since it's very difficult, as Giovanni Petruzzella has just mentioned, to define a relevant market for data, what kind, no, it's very difficult. Maybe one possibility is to move from a privacy perspective, saying that we should start having again ownership of ourselves. Which means we are protected in the web, actually, through privacy on the one side, through copyright on the other, with freedom to speech on the other side. But these are all single aspects of the same person. So maybe we need to move on to another more complex notion of protection of the consumer or the citizen in the web, which is all the projections of all the dimension of myself in the websites should belong to me. So when I go searching through the internet and leaving information about myself, on the one side, the freedom to search is the expression of my freedom of expression, but on the other side, this creates an economic good that is produced by myself, but it is owned by someone else. So I insist in saying that what the digital capitalism is actually producing is, for the first time in the world, a strong separation between freedom on the one side and ownership on the other. Okay? We used to put together ownership and freedom both in the traditional capitalist story of the West and both on the socialist tradition. In one side it was private property, in the other one was common property, but they were put together. What is new in digital capitalism is that there is a strong separation between the expression of freedom, so liberty on the one side, and the property of that liberty on the other, which belongs to someone else. So this means moving from a notion of privacy, which is to protect myself in my single garden, to a notion of privacy which is proactive and is property of myself, also in order to gain economic opportunities, which could be one way to solve your questions. So, because if I move from one provider to the other, and I could bring with me all the information that I have released, then there could be someone else that can use this information to make a better deal for myself. So it's a sort of creating a market for arbitrage and a market for access to information that maybe can solve some of the problem.
Just two sentences. The first one, the last point that Professor Nishita was speaking about is interesting as it's going in what are the legal instruments. When we speak about property, then we enter in an area, what I try to say is that for sure is a matter of a new seminar. We cannot solve the problem here. I'm not sure, frankly, that the property scheme that is not a European one. We are based on the idea of fundamental rights and act in a different way. But apart from the technicalities, this is the real point. I'm not sure that saying that the data are mine give more guarantees in terms of market, in terms of prevention of discrimination or abuse in price differentiation. This is what I want in 1 minute to say. The second point is, we were speaking with Petruzzella about this. The seminar was that the meeting was an occasion to launch bridge also between different authorities. And if it works, it's good in any case. but we need to be realistic as well, as in the sense that the real problem, as far as I say, and I underline that I'm speaking in my personal capacity, obviously, is the problem about jurisdiction. So the point is that the central actor, the main actors in digital economy are not based within the European countries. And even if we have assisted in the last time to two very important, I would say, judgment of the European Court of Justice, I mean about Google Spain and now about the safe harbor decision in the area of data protection that was pushing a bit against the issue of jurisdiction. In any case, the kind of data processing operation that are done by the over-the-top, just to say, cannot be checked by entities based in a different jurisdiction. So the only way, a realistic way, is, I can say here with the representative of the Chamber of Deputies, is more or less to go in the direction of a declaration of internet rights or something that could apply perspectively on a global scale. Otherwise, we can have the better intention, then there is a problem about resources in the authorities, kind of regulation. So if you don't have one common playing field, it's difficult to say that we will see a change, a significant change in the digital economy. And this is a political issue, in the end. It's technical, it's legal, it's economics as well, but it's a political issue. So for this reason, I understand, it's my personal opinion.
So again, back the question to the Parliament. Okay, a very final, very short question.
Yes, please. Hi, I'm Clara Cibrario. I picked up on the word paternalism. I studied law most of my life, and I think we spoke a lot about informational asymmetries between competitors on markets. And we spoke less about informational asymmetries between producers who act on a market and consumers who are those who exercise market choice. Professor Nikita mentioned paternalism. I studied in the US where this is being spoken a lot about. And I had an American professor who used to say that public interest is a thing that is very different from what interests the public. Yeah, that was Cass Sunstein. But I studied with Cass Sunstein, and he used to stress this a lot. And I think this has never been more true, right? So we're operating in a place where the choice for paternalism seems to be pushed by the fact that consumers can't go and catch and look for the information they need to exercise a free choice anymore. And that's completely changed the paradigm of regulation. Yes. Very good point, yes. I share this view.
Okay, thank you very much. So, it's the moment for the answers.
By
Yes, so thank you very much. I appreciate all these comments, very valuable. I agree with most of them. I'll just respond very, very quickly. Comments about new definition of market power or new laws, very much so. The problem is that the dominant trend or the underlying philosophy in Europe is regulating dominant firms who have exercised market power. One of the problems is that we're entering an era where companies without market power also will be perhaps be seen to be acting in what public may regard as abusive forms. In particular, there is quite a bit of evidence that in some situations, increasing competition actually leads to greater price discrimination. example that was shown for British ISPs, internet service providers recently. That's just one example. So I think we'll have, again, I don't have any neat solutions or how to deal with it, but I think you have to take a broader view. But again, you have to be careful not to take too broad a view, because then you kind of might regulate too much. That's kind of, we always have to keep in mind that you can push things and then really block innovation. U.S. railroads is just one example, but there are many, many others as well. Some other things, comments about how how the reservation price or value that people place on goods and services might be hard to determine. I think that's very true. In my paper, I have a whole section, a large part of it, devoted to a concept I call confusology, namely companies creating confusion or so. There are other forms, some legal scholars have written about sort of digital market manipulation or so. Manipulating perceptions, trying to steer people into particular behavior. Again, it's it's still in the early stages, but the ability to do so, I think, is improving very rapidly as the more data is accumulating and people are running more experiments in there. And some of these things, I've been told, I don't know for sure, that there are consultancies which tell companies how to gather information and then teach their employees, call center responders, how to bargain with particular individuals. So the kind of stuff I referred to when the Wall Street Journal called me up about renewals. So these people in such situations are getting more training and more information about how to be more effective for those producers, for those sellers. Something else, I think the word about transparency I heard was, I think, absurd, or I forget what word used. Yes, very much so. Actually, there is a wonderful phrase, which is a title of a paper. It was published by a legal scholar a few years ago. Transparency is the new obscurity. Okay. You dump 50-page, end user agreement on somebody full of dense legalese and so on. What do? It gets much worse when you get into these black box algorithms, where the seller or the person running the algorithm may claim with complete honesty they don't really understand what goes on. I'm familiar with, being originally a mathematician, I'm familiar with some of the mathematical techniques, and yes, some of them are kind of use randomization of various types, they other use various statistical correlation techniques, and all very complicated, all depending on the data in the system at that second. So if you ask to audit it a week from now, you will not really be able to, because the system, all the data the system relied upon to produce a particular decision in your case will not be there. So you'll again have to decide how you're going to audit. Now, there are precedents, but again, you may not necessarily regard them as positive. For example, and I'm not quite sure about European situation, United States, there are insurance companies which are usually regulated by states, very often tightly. It depends from state to state. That is an interesting topic to study, see how different states operate and what are the different results. And people have been studying it. I'm not an expert on it myself, but states have regulations. What kind of factors can insurance companies use in providing policies? Can they use sex or gender in that case? Sometimes they can, sometimes they can't. Race? No, that's kind of illegal, even though if you just run various correlations, you would certainly find lots of very strong correlations which would sometimes work to the benefit of, say, disadvantaged minorities, sometimes to the advantage. If you happen to be African American, United States, on average, your life expectancy is quite a bit lower than for whites. In which case, if you simply did a straightforward decision based on nothing else but just on race, then the African American would have to pay much more for life insurance, but much less for a retirement annuity. Okay. Well, when do you allow this? Very good question. So very, very difficult. And of course, one of the big problems is that now the game in this industry will be to game the regulators. Okay. And there'll be all sorts of issues with regulatory capture and such like. So,
thank you for all the participants to the discussion. Final remarks from Honorable
Thank you all for being here. It's been very interesting. Thank you for having survived the English-only meeting without translation in the Chamber of Deputies. I guess this is the first time ever. So thank you very much, Andrew, and to our panelists. I really appreciated the day. Thank you very much.
Thank you.